Hey, good morning, everybody, and welcome to this Tuesday, July 22nd, 2025 edition of Trading Places live at earningsbeats.com. I'm Tom Boley, Chief Market Strategist here at Earnings Beats. It's a pleasure to be with all of you again this morning. I do want to apologize. We did not have a weekly market recap this past weekend. I was out of town on a golf trip, so just didn't get back in town in time. But that's okay. Not a whole lot has changed. We still got the market hovering near all-time highs. Should have a lot of excitement starting to pick up, though. Earnings season starting to kick into gear. We've gotten a couple of good, solid big companies out, mostly in the banking and financial areas, but also we've seen Netflix and a couple of others. We got two big ones coming up Wednesday after the close. We have Alphabet or Google. They'll be reporting Wednesday after 4 p.m. Also, Tesla will be reporting. So maybe we'll try and take a look at both of those charts, see what they're telling us before the big announcements tomorrow. We've got a Fed meeting that starts next Tuesday. We are now in the Fed quiet period. So technically from the Saturday, actually it's the second Saturday before the meeting. So next Tuesday is the meeting. So technically from this past Saturday forward, all the way through one day after the meeting. So you got to go through the end of the day on Thursday of next week. That's what's referred to as the Fed quiet period. They're really not supposed to talk about interest rate policy, inflation, those sorts of things, anything that would direct their policy. They're supposed to remain somewhat quiet on. I know that Fed Chief Powell is speaking today, but I think it's at a Fed conference. I think he's giving welcoming remarks, probably going to talk about the capital structure and so forth, but nothing specific about the economy. We shouldn't really be hearing too much about that. There's nothing else today in terms of economic reports. So it'll be a little bit quiet, but like I said, earnings season is starting to kick in. We'll start to get more and more companies that can move the market based on their earnings reports and their forecasts and so forth. So that's what we have to look forward to. In the meantime, we'll just keep, taking it one day at a time. So let's take a look at the action on Monday. You can see over here on the left side, the Dow Jones, it was a bifurcated market. Dow Jones was actually down while we saw the S&P 500 and NASDAQ both higher. But there was constant erosion. It seemed like the market got off to a pretty good start on Monday. And then we just kind of eroded throughout the rest of the day. So we ended up losing ground on the Dow. We lost ground on the S&P mid-cap index, the S&P small cap index. You can see both of those kind of in the lower left part of your screen there. But like I said, the S&P and NASDAQ did gain ground. S&P closing above 6,300 for the first time in its history. But it did seem a little disappointing because it was up much higher, probably at least another 30 or 40 points earlier in the day. Still, win is a win, another all-time high in the books. So all of that's good. You can see over on the market movers area over here, these are the top performers on Monday on the S&P 500. So XYZ, which has been pretty hot of late. You can see the last 4 or 5 days, one of the last 4 days, moving up from about $66 to about $78. So nearly 20% over the last 4 days. Yesterday gaining over 7%. Very strong action there. Verizon, Hershey's. Hershey's is one of the stocks I've talked about in the past. Being a solid long-term performer, I think the stock had gotten down into the 140s. Which was quite a bit off of its more recent high. And that put its dividend yield up close to 4%, I believe. Might have even been a little over 4%, which is really high for a stock that's had pretty steady growth over the years. Anyway, Hershey's has been bouncing back. Yesterday was a strong day, although it did not make a breakout. I think we were looking for a high close above about 178 to get that breakout. So we were up close. We did trade above 180 intraday. But we're not able to close above. Still, Hershey's with a strong day. Ross Stores, Deckers, Tapestry, TPR. This is one of our portfolio stocks. This has been absolutely on fire. It's one of the big movers that's helped our portfolios outperform the S&P 500 this quarter by a pretty wide margin. TPR very strong. As I mentioned, Google will be reporting. Google starting to make a pretty big move here into earnings. I'm a little nervous though because its relative strength was not all that great heading into this past several days where we've seen this big move to the upside. And actually, I would say during the month of July, we've seen a little bit of a bounce back in Alphabet shares. Don't know if it's maybe a little bit of a trap before earnings or if this is really the real deal, but we're going to find out Wednesday after the bell. Looking at the sectors yesterday, the communication services sector was the leading group. You can see gaining 1.34%, materials gaining 0.5%, discretionary up nearly 0.5%. Those were your three leaders. We did have 6 sectors moving higher, 5 moving lower. So just like the major indices, we had sectors that were very bifurcated as well. Some gaining ground, some losing. Energy, which has been very weak of late, along with healthcare, which has probably been the weakest sector of all. Those two lagging pretty badly on Monday. Otherwise, it was mostly just another ho-hum kind of a day in a secular bull market advance. Moving on to industry groups. This is one of the ways I like to look to see what areas are leading the market. I mean, we can go into the sector drill down, and then we can you can click on, say, communication services here, and that will give you all of the industry groups within communication services. So that's one way to drill down to take a look at what's happening. But still, when you want to compare all of the industry groups at once, is mobile telecom the best performing group on Monday? From looking at this, we don't know. We'd have to go back and click on every one of those 11 sectors and find out what the leading industry groups are within. That to me seems like a lot of work. So we have what we call our industry group relative strength chart list. And here we've got all of the industry groups relative to the S&P 500. So this shows gold mining up 3.32%. That doesn't mean gold mining was up 3.32%. It means that it's 3.32% above the S&P 500, whatever the S&P 500 did. So it's just a relative strength indicator. So you can see gold mining, mobile telecom, which we were just talking about in that communication services group. 3.25% is the relative strength. And if we look at the actual strength, it was up 3.40%. But on a relative basis, it was up 3.25, more than the S&P 500, because the S&P 500 was up a little bit. But then you can just kind of go down the list. You can look at the names, the industry group names if you want. Sometimes what I do is I'll just glance at these sectors just to see if there's a lot of one or two particular sectors that did really well. You can see XLY, 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 XLY. So 4 in maybe the top 10 or 11 were in the discretionary area. So we did see a lot of strength in discretionary stocks. We got a couple there, materials, along with both aluminum and steel. Steel's actually been showing some relative strength. And I've been including steel recently in some of my hot groups, and I'll show you why. Let's take a look at the actually, I think what we can do is take a look at this on an edit basis. And let's go down and take a look at steel, which should be down here at the bottom. There it is. So if we pull up steel, this is what I'm looking at. So since the end of December of last year, we started to show strength. We did pull back in April, May. So when all that money started rotating back into some of the aggressive areas, steel lost its luster. But since the end of May, it's come roaring back again, and it's actually performing pretty well. You can see on an absolute basis, the steel index has gone up from about 440 at the end of March to over 600. So that's a lot of absolute strength. And then you can see the relative strength really has picked up since the end of May. So this absolute strength has actually resulted in a lot of relative strength as well. And right now, steel is sitting at probably about an 8-month relative high versus the S&P 500. So this is a group that is showing strength. And as I just mentioned, also in the, let's go back here. Bring that up in the summary form again so you can see. So on a relative basis, you can see also performing well here, up 1.78%. If we go back a week, let's see where steel sits over the last week, sitting right here, gaining 1.43%. So it looks like maybe it's about 15th, 13th, 15th, something like that. If we go back a month, steel is sitting right here. It's about the 10th best group. So you can kind of see it just recently, last day, the last week, the last month, steel has really moved up. And steel over the last month has outperformed the S&P 500 by nearly 7%. So there are some groups stronger, but not many. So this is a group that's definitely been up and coming, one to watch. Gambling's been another group we've been talking about of late that's performed really well. Of course, semiconductors have been performing well over an extended period of time. We could go back 3 months. You'll see semiconductors right on top. Go back 6 months, semiconductors right here. So that's what, about, again, 12th, 13th on the list. Go back a full year, 1 year, and semiconductors still sitting probably around the 12, 15 area, something like that. So this is a group, semiconductors obviously has been very strong, been carrying the market to the upside. So speaking of the overall market, you can see the tail. We did get up to 63.36 on the S&P 500 before coming back down, closing at 63.05. So we were 31 points higher before reversing back out of that, back to the downside. But the move to the upside, like I said, it's almost gotten kind of boring. And this is what we see with secular bull markets. It's just, every once in a while you have a down day, you pull back 30 points, but then you go up 15, then you go up 20, and then you go up 12. All of a sudden you're at all-time highs. You pull back 6, then you go up 8. It's just, like pulling teeth. If you're short, if you're trying to short a market like this, it can be incredibly frustrating because the market just seems to want to go higher almost every single day. There are reasons for it to pull back short term. We got overbought conditions on some of the charts. We've got negative divergence. As you can see, this one's been pretty adamant, the negative divergence, and the market just ignores it, just keeps going higher and higher. So like I said, pretty frustrating if you're on the bearish side trying to get this market to come down. Seems like even the bad news these days doesn't really impact the market. Market seems to bounce back from just about everything. But we do have some big earnings reports coming out. We do have the Fed next week. So we do have obviously some serious market moving type of news that will be out over the course of the next few weeks as earnings season really starts to kick in. But overall, I think the S&P 500 continues to look good as long as it keeps trading above the 20-day moving average, which is well above the 50-day moving average. That's a very bullish configuration. It's one that you typically see often during secular bull markets. NASDAQ 100, very similar looking chart, very similar looking negative divergence. And there you can see the daily RSI at 73, a little bit overbought. Market doesn't seem to care as we just keep pushing higher and higher and higher. IWM has pulled back the last couple of days. We tried to get through this 225 area, opened above it on Friday, could not sustain it, came back down, closed lower. Yesterday, we gapped up, came down, closed lower, closed on the low of the day. And I think last check, let me give you the futures. We got about 17 minutes to go before the opening bell. And right now, the spider just up fractionally, 6/100ths, so less than 1/10 of 1%. The QQQ completely flat. QQQ down 1 penny from yesterday's close. IWM showing a little bit of relative strength, up a quarter, which is about a little more than 1/10 of 1%. So it looks like we're going to open relatively flat again today. Probably nothing earth-shattering coming from Fed Chief Powell, as I mentioned earlier. He is speaking today at a Fed conference, but he is in a quiet period. The Fed has a quiet period that goes about 10 days prior to the meeting and lasts through 1 day after the meeting. So it's almost a 2-week period where the Fed really is not supposed to be talking about economic policies, interest rates, inflation, anything that would impact what they might do at their next meeting. Let's keep moving here. XLK, I wanted to mention the XLK because this has been easily the strongest sector. We had our model ETF portfolio draft last night for our members at Earnings Beats. We just had a stellar quarter in the last quarter where our model ETF portfolio outperformed the S&P 500 by 3.5%. That was over a 3-month period, which is pretty strong. Anytime you can take a basket of ETFs, which by themselves own a basket of stocks. So you're getting a very, very diversified portfolio. Anytime you can take that and beat the S&P 500 by 3.5 percentage points in a 3-month period, that's pretty strong action. Anyhow, last night we made our selections for what we're going to do in the next quarter, moving over the next 3 months through the middle part of August and into the earnings season, or not the next 3 months through, October. So that'll take us into the earnings season. That'll kick off Q3 earnings season. That'll kick off the middle part of October. But one of the keys, I think, in beating the S&P right now is continuing to stick with technology. Technology was a little bit more than 30% of the S&P 500 3 months ago. And at yesterday's close, it had grown to almost 33% of the S&P 500 because it's growing so much over the course of the last 3 months. Continuing to perform well. I expect earnings are going to be very strong in this sector in this upcoming earnings season. Already gotten off to a pretty decent start. Like I said, we'll get some others. We'll get some companies that'll be reporting. Apple, Microsoft, both coming up within the next 10 days to 2 weeks. So we'll be getting those reports. But I look for technology to continue to outperform. We have not even tested the 20-day moving average on the XLK since we crossed it at the end of April. We've gotten close. We got close at the end of April. We got close again in about the 3rd or 4th week of May. Again, right at the end of May, and one more time in about the 3rd week of June. More recently, we've gotten fairly close, but still a few dollars away. But right now, we're sitting at 261. That 20-day moving average is at 254. So we got a $7 cushion down to it. And it just seems like, technology just wants to continue to push higher and higher and higher. Like the S&P, like the NASDAQ 100, we do have a negative divergence here. So far, it seems to not have mattered much. Maybe it will. But for right now, the technology group continues to lead us higher. The 10-year Treasury yield, just wanted to mention this, sitting at 4.36%. Last week, had the inflation reports out. Everybody, well, not everybody, but there were some that were talking about, inflation surging again. The annual rate jumped. Well, it wasn't so much that the annual rate jumped because we had a strong, high inflation number that just came out in June of 2025. The reason that we jumped is that the number that comes out in June 2025 replaces the number that came out in June of 2024. And that June 2024 number was a very, very low reading. So we came in about where we were expected. Actually, PPI came in well below expectations. Core CPI came in slightly below expectations. So as far as I was concerned, the inflation numbers were pretty benign. But the media, being what it is, looked and said, it's surging. It's not surging. It's just that last June was the best inflation number we had had. That number dropped off, and a better than expected number went in, but it was higher than last year's. So as a result, the annual number changed and went up. But it wasn't because current inflation was moving higher than expected. So to me, it was just more of a spin on the actual numbers rather than a honest commentary. We are still seeing very little impacts of tariffs going through the system and impacting inflation at the consumer level. And I think that's what the Fed has said they're worried about. That's why they said they haven't cut rates. Fed Chairman Powell just a few weeks ago made that exact comment. He said we would have already started cutting rates if it wasn't for our fear of what tariffs were going to do to inflation. Well, now we're into June. How many more months do we need? Fed was data dependent for a long time. Now they get the data that supports rate cuts, and they don't want to be data dependent anymore. Now we're going to look ahead and see if we're going to get anything. They've been changing their tunes for their tune for really 7 years, ever since Powell's been in. I think it'll actually be very welcome news for the market when his tenure ends in May of next year. Anyway, 10-year Treasury yield's been backing back down after those inflation reports from last week. So there was a lot of maybe trepidation in the market as those inflation numbers were coming out. A lot of folks selling the bonds, and with yield, that means yields rise because there's always that 100% disconnect. They go in the opposite direction. Bond prices and bond yields always move inversely to one another. So if the yield's going up, it means folks are getting out of bonds. And if the yield's coming down, that means folks getting into bonds. So since the inflation reports came out last week, folks are jumping back into bonds again, sending that yield back down from 4.5% back down to 4.366 currently. If you haven't already checked us out at earningsbeats.com, make sure you do so. Over at our home base here, earningsbeats.com, you can sign up. We have a 30-day no-cost trial. We'd love to have you. Just click on that green button. We get you started. Also, I do want to mention we've got a free piece that I've done for, always trying to give back to the community. If you'd like to learn more about what I think is going to be a 50% gain, it says by year end, but I'm going to give it a little bit more time. Let's say over the next 6 to 12 months, 50% gain over 12 months would be pretty strong as well. But I think there's an area of the market's going to gain 50%, going to beat the S&P 500 by a mile, at least in my opinion. If you click on that, you can do that to learn a little bit more. Ultimately, I got a video for you that'll point out exactly which group I'm looking at, why I think they're going to outperform by so much. I'm going to show you historical precedents of what has happened in the past in periods when they have seen that area of the market has seen such crazy outperformance, and it's all setting up again. So anyway, make sure you check that out. That could significantly change your financial performance going forward. And then finally, I always like to mention down at the bottom, we have a free Earnings Beats Digest newsletter. Name and email address, all it takes. Literally, we've had tens of thousands of folks sign up for this digest, and why not? It's a free newsletter, provides a lot of potential trading candidates, couple a week. And I can tell you that the stocks that we provided in June and July they've been outstanding. So make sure you check that out. All right, last thing I wanted to do before we wrap up, I'm going to spend maybe 5-10 minutes here on this, is I wanted to show you over at Stock Charts, and I do this once in a while, but if you want to just look for breakout candidates or breakdown candidates, whatever, I like to go down to this Your Scans area. And if you don't see this on your dashboard, so if you're looking at this and you don't see all these panels down here and you don't see anything about scans, make sure you go over to this like gear shift in the upper right-hand corner over here. Click on that. And that'll tell you what's checked off, what you have checked off and what you don't. So I've got scans and alerts checked off. If I uncheck that, if it's not checked, my scans and alerts disappear. There's nothing here. So I got to go in here and make sure that I turn on scans and alerts. Then I can save preferences and I come down, there's my scans. Now this little area, this more, it's a drop down where you can look at scans a little different way. Here you can go down to predefined scans. This is where Stock Charts is already running predefined scans. I mean, you might have some that you want to do, some custom scans, but if you just want to stick with some of the things that Stock Charts is already doing, just come in here and hit this predefined scans list. And then it'll come up, and I like to look at 52-week highs. These are breakouts. I mean, there's just stocks that are trading that yesterday at some point during the trading day traded at a 52-week high. So I'll go in here, and I'll start with NASDAQ stocks just because I like to be a little bit more aggressive, and that's where this is home to a lot of the high-octane growth stocks. So I click on this NASDAQ, 169 stocks. There's your matching results. And then a lot of times what I'll do is sort this in scooter order. So these are the best scooters. So a lot of these stocks that are making new highs with a scooter score of, say, 99, these are stocks that probably have been making 52-week highs day after day after day. They're probably very overbought. But we could pull one up and just take a look. Here's ASTS, which is AST Space Mobile, and you can see pretty strong. And there you can see the last 6-7 days, very strong until yesterday. It set a new high, but it actually put in a little bit of a reversing candle and did it with a negative divergence. I'd be a little careful with a stock like ASTS. When I see a dark cloud cover print with a negative divergence, unless it can take out yesterday's high, I look for the stock to go lower in the near term. So if I'm looking for a breakout candidate to trade on the long side, this is not going to be the one. To me, I think there's way too much risk. When I see a negative divergence and a reversing candle, it starts to make me think potential 50-day test. So we closed at 56, and I got 50-day down 37 and change. So to me, there's way too much potential downside. I'm not saying it's going down. We have no crystal ball. We don't have any guarantees. I just, based on experience, when I see negative divergences and reversing candles, to me, it opens up potentially much more weakness. So I'd be careful with a stock like ASTS. Now, again, if we look at a bunch of these stocks with 99s, we're going to see a lot of stocks that are very overbought. But sometimes what I like to do is find 52-week highs that have maybe scooter scores in the 80s or even in the 70s. A little bit more, a little odd to get 52-week highs with a stock that's sitting so low. But maybe look at like an LPLA. This is a 62 scooter, but it just set a new high. So we pull up LPL and you can see how you get more sideways consolidation. Here we made the breakout, and then of course we got a failure, but it went down to the 20-day. This is going to be a key area on LPLA. I think if this holds the 20-day, moves back to all-time high, or moves back to a 52-week high, I think that would be really bullish for the stock. So this is one I definitely would keep on my radar. Let's see if there's any others. I'm not going to look at a biotech. Here's semiconductor, Rambus, 80 scooter. And we pull up Rambus. It just went to a 52-week high. Maybe it's a little bit stretched here. We'll look at it here. AD line is okay. It's getting better. Not exactly flying, but it's okay. Relative strength, it's not one of the best semiconductor stocks. The breakout was made on better than average volume, but not off the chart volume. This stock's okay. I would not chase it. I think it's got enough question marks on it where I'd either wait for a 20-day test or I wouldn't trade it. But let's keep going, see if there's something else maybe that sticks out. Here's another semiconductor, AEIS. AEIS making a similar type move. Let's see, AD lines much stronger. This breakout was made probably about a month ago, almost a month ago. Continues to push higher. I don't like that false breakout and reversal. So maybe we get a 20-day test, but I think 20-day test would be interesting on AEIS. It's another one. This one's been going sideways here relative to the semiconductor group, but the overall group's been flying. So going sideways and just kind of riding along isn't a bad thing. Volume a little lighter. Maybe keep that in mind, although normally trades over a couple 100,000 shares, and it is a $142 stock. So I don't think liquidity is that big of a deal on AEIS. So that one's kind of interesting. Let's see if there's another one maybe that we can find. Bunch of banks setting new highs. Alta. Remember, this was Warren Buffett's, one of his latest investments. Talked about Alta. Alta making new highs, getting up, coming down, testing the 20, making a new high, testing the 20, making a new high. I like the way this thing has been trading. And AD line, I like to see maybe strengthen a little bit, but look at the relative strength. Stock's now at about a 6-month relative high to its specialty retail peers. So all in all, volume trends, I think, have gotten a little stronger. Yeah, I like Alta. I think Alta is an interesting stock. Definitely a 20-day test, I think, would be a great buy on the stock. All right, maybe one more. Fastenal recently came out with its earnings. It was actually one of the first companies to report this earnings season. So we'll pull that one up. That was the earnings report right there. Made that move, and now it's just continued moving up, although it did reverse close near the low yesterday. Again, maybe we get a pullback, but I think this stock back down near that 20-day moving average would be very, very interesting candidate to trade. All right, lied there. We'll do one more. Let's see. Technology, electronic equipment. How about an ITRI? Another one. Now, this one does have, you can see that PPO clearly has rolled over as price continues to move up. Relative chart, AD line looks good. Relative strength, not bad. It's in a very strong group in that electrical component area. So I think Itron looks really interesting, ITRI. Again, another pullback, maybe 20-day test would be interesting. With that negative divergence, there is a chance that we go back to the 50. I guess you got to consider that. I mean, that definitely is a risk. I don't think it's going to happen just because I believe that these stocks are under such buying pressure right now. Looking at that AD line, looking at the recent relative strength that it went through during the entire month of June, during this period of escalating price. We had surging relative strength. I think, if anything, it's maybe slowed down a little bit, but this is a stock I think still looks good. I like it off the 20-day, but I would understand if anybody wanted to wait to see if you get a 50-day test off of that negative divergence. All right, it is 9:30, so market just opening. Let's take a quick look, see where we are. We got a little bit of strength here in the NASDAQ, S&P flat. Small caps, mid caps, both showing a little bit of relative strength to open the day. I think we're still showing yesterday's S&P 500. Let's see if we can get S&P 400. I think that was from yesterday, up 12% on CLF. I think CLF was one of the stocks in our July seasonality, though. This is a stock that loves the month of July. Maybe we'll look at that one last second here. Let's do seasonality on CLF. I don't know if it's CLF or CF. But we go back the last 13 years, July, you can see 77% of July's higher, averaging 11.1% during the month of July. So pretty strong for CLF. I'm not sure if it was CLF or CF, though. So let me just double check this. Actually, I think I go back 20 years for that. It may have been CF, because over the last 20 years, CF's up 80% of July's and 6% average return. So CLF does have good July performance, but that I don't believe was one of the July picks. But still, CLF, look at this move. Looks like the downtrend's ended, making a big push back to the upside. Looking at the relative chart here, first of all, you can see the AD line is really soared on this move. That's good news. And then this is one of those stocks in steel. Remember I said steel we've been including as one of our leading industry groups of late. And you can see why. I mean, we got some of these stocks now that are really starting to make some big moves in that steel area. All right, that is it for me. I do, again, want to thank everybody for tuning in today. We'll be back again. I'll be doing our live trading room on Wednesday. So if you are a member or you become a member, you can join me tomorrow at 10 a.m. Eastern for a live trading session. It's very educational in nature. We'll look at some stocks trading, but it's really an in-depth look at some of the strategies and so forth, things that we employ, looking at the market, looking at individual stock trades, answering member questions. I probably spend 45 minutes in that room doing nothing but answering questions. So it's a great opportunity to come in and learn and hopefully, pick up some trading tips and things that can help in your everyday trading. Anyhow, everybody have a great rest of your day. Let's see how the market does. And remember, tomorrow after the close, we have both Alphabet or Google and Tesla reporting earnings. Have a great day, everybody. Happy trading.